Hey guys, welcome back to another Forex market analysis video. My name is Alexander Nikitin. I am a professional trader and a programmer as well. And the pair I'm going to analyze today is New Zealand dollar. As usual, my analysis consists of two parts. I first analyze the higher time frame, then I switch to my trading time frame. On my higher time frame, I am to identify what price is doing now and what price is most likely to do next. And on the trading time frame, I am to decide how can I get involved and to execute the trade. So, identify, predict, decide, execute, IPDE. Well, let's start from the higher time frame. How can I identify what price is doing now? I need to pay attention to the turning points of the market. Let me draw to show you my thoughts. Look at these turning points. We have a movement to the downside, then we have a movement to the upside, to the downside again, to the upside again. Something was preventing us for some period of time, preventing us from breaking this level. Something was supporting price higher. But then we broke it. Look at this candle. This candle is the first candle that has a candle low and a candle close below the previous lows. We didn't have them here. That's why I say that it is the same level. And then we break it. After we have broken something, we expect the continuation. And of course we had that continuation. And then, what happened next? We came back to retest the broken support, and that, as it is usually said, broken support turns into a resistance. So we found some kind of resistance here. Look what happened next. We broke it here, broke the level of resistance to the upside. But this was a false breakout because we didn't have any continuation of that kind. We had a break in the opposite direction that coincides with previous direction. So usually after we have a breakout, after the false breakout, this is a very true breakout. Okay, so this is my higher time frame analysis. We have a breakout to the downside, and most likely we will continue moving to the downside. So how can I get involved then? I need to switch to my trading time frame to find some reasons for entry. Okay, on 4 hour I don't see anything, and on the hourly time frame I see it very well. My reasons for entry are the four advanced pattern formations. They are cipher, bat, Gartley, and butterfly. Okay, they are called advanced pattern formations because when you trade them, you know in advance where to place your stop loss, where to place your target, where to place your entry. You know in advance how much you're going to risk, and you have plenty of time to make up yourself ready for the trade. Okay, and the pattern that I see here is called a cipher pattern. Okay, we have our first XA leg that establishes our XA points. Then we have a retracement to the upside. According to the rules of the cipher advanced formation, the retracement to the upside should be at least 382, and the candle close in maximum should not close above 618 retracement of XA. If this criteria is met, then we look for the third movement that should be an extension to at least to 127 of XA. We have it at least 127 extension, but the candle close should not go beyond 1414. We have a candle wick a bit lower than 1414, but we do not have a candle close lower than 1414. If these two criteria are met, the first retracement and the second extension, then you need to stretch the fibs from X to C and look at the 786 786 retracement of that whole movement. So this will be your entry point. It is placed here. You see, we have plenty of time here. Every candle is one candle, 1 hour candle. So maybe next hour or next hour, we are ready for that. Just placing the sell limit order. Okay, so once we have our order, where should the stop go? The stop should go above X point. The stop should go above X point. It shouldn't violate that. And where should the target go? The target should go to 382 level of CD. 382 level of CD is here. At least the first target. If you trade multiple targets, the second target is placed to 618. 382 and 618 are the targets for this pattern. Usually it is drawn as two connected triangles, showing you the wings of a butterfly or whatever. You see how it looks like. Well, it may be a bit difficult for you to identify this pattern because you need to know the rules for identifying XA leg, for identifying BC, AD, CD leg. You need to know all those ratios. You need to know how to calculate your entry, your stop loss and your target. Well, that's why I have created a number of scripts that will do all this work for you. Identify the same 4 advanced pattern formations: the cipher, the Gartley, the bat and the butterfly, using the same exactly ratios that I used while trading advanced patterns. Okay, I have 3 of them to analyze: large swings, medium swings and smaller swings. Large swing is 12, medium is 8 and small is 5. Boom, and we have it here from the first double click. If you want me to measure it, of course I'll do that. The B point retracement is okay. The C point retracement is never closing 1414. It is okay. Let's measure the entry. Entry is the blue line, which is the 786. You see, 786. Okay. So the stop loss is above X. It is calculated as the 786% of the distance to the first target. I'll explain it in a second. I'll first show you how the target is calculated. From your C point to your D point, you stretch your fibs, and 382, this green line, here it is green, is your 382 level where you should place your target order. I think it is a buy stop order. If you are selling, you need to place a buy stop order to buy it back. Okay, so how do you calculate the 786? I mean 78 and 6% of your target distance. You first need to measure the 100% of your target distance, like this, and then you need to place it this way. 786 should coincide with your entry, and you will see your target goes to 0.71422. 0.71454 is the red line says. It is more precise than I. I'm not stretching the fibs that much precise. Okay, you also have the information of that. The name of the pattern is a bear cipher. It is valid. You also have the number of pips you are going to risk. The number of pips is 25. Okay, if you are risking 0.1 of a standard lot, then every pip will cost you $1. In case you have a dollar account, it will cost you $1. And if you're risking 25 pips, this means that the risk will be $25 in this particular trade. If you are trading one standard lot, then you will be risking $10 per pip. This means that you will have $250 in this trade of potential risk and $327 of potential gain. So that's it about the cipher pattern. That's it about the opportunity that I have on my radar. Hope you liked that video. Hope you learned something from this video. Hope you got the idea how you do your analysis, identifying that structure on high time frames and then finding some reasons for entry on lower time frame. Well, if you liked my video, please give me your thumbs ups. Go to my TradingView profile page and subscribe to my ideas. Also subscribe to my next videos here on YouTube. Well, I invite you to join my Facebook group as well. Share this video on social media. Until then, good luck, good trading. Hope you will trade your plan. Hope you will plan your trades in advance and not just, oh, I need to sell it right now, or I need to sell it, I need to buy it right now, something like that. Goodbye.